Hello everyone, welcome to Chapter 1 of the Governmental and Nonprofit class. What we're going to do today is we're going to work through our Chapter 1 studies, where it's really a macro chapter talking about governmental accounting. We also have a few slides on nonprofit accounting to talk in generalities what a government is, what a nonprofit is, and how the actual financial report looks like. You're going to see that it's a lot different than a for-profit company. Okay, first off, governments and nonprofits, they differ so much from for-profit businesses. Governments and nonprofits, they actually have a different purpose in society. Their purpose is not to make a profit and are profit-driven as a for-profit business would be. Their purpose is to meet the constituents' expectations. So as an example, the government is there to provide services to the residents of the particular government entity, whether that's a city, a county, a school district, a state government. A nonprofit, they're going to follow the core mission of that particular organization. A nonprofit, it could be your local church or synagogue. It could be the AICPA, the FICPA. It could be the American Cancer Society. Obviously, the core missions are much different than simply making a profit. What you will also see with governments and nonprofit is management has a duty to be accountable for how resources are used. So what you're going to see is an open book. For instance, local governments. You can go on any city website in the entire country and you will find the budgets, you will find the financial statements, you will find the minutes of the meetings of the mayor and the other commissioners. You might even find videos of the commission meetings. It's an open book. It's not anything that should be done in secret. And the last thing you're going to see with governments and nonprofits, they are financed by resource providers who do not expect benefits proportional to the resources they provide. Let me give you an example of a government, and then I'm going to give you an example of a non-for-profit. First of all, with a government, let's say that I live in a very wealthy community and I have a very large mansion. I've got a lot of property and my annual real estate tax bill is, let's say $50,000 a year. And then there's an individual that also lives in the city, but he lives in a much more much smaller communities, much smaller houses, and let's say his real estate tax bill is $2,000 a year. Okay, he goes down to the local city park to play catch with his son on the baseball field. Now, I cannot, as the owner of the big house and pay $50,000 a year in property taxes, I cannot go to that city park and say, "Hey, buddy, I pay a lot more than you in property taxes, so beat it. I get to play in the park more so than you." It doesn't work that way. Same thing with nonprofits. Let's say I donate to the American Heart Society, or the American Cancer Society. Okay, I might be a resource provider because I'm a donor. But I personally may never have cancer. I may never need to utilize their resources. So obviously, me as a donor, I'm not actually receiving services from that particular nonprofit. So you can see the benefits that the providers get out of the government or the nonprofit may not necessarily be in proportion with the resources that they give the governments and the nonprofits. Okay. Now let's talk about governments. First, we have general purpose governments. Those are the governments that you think of when you think of governments. Federal government, state governments, county governments, cities, towns, townships, villages, boroughs, parishes. A lot of these municipalities, cities, towns, villages, boroughs, they pretty much all mean the same thing, but different parts of the country have different, they call them a little bit different. But these are your general purpose governments. General purpose governments provide a broad amount of services to their residents. As an example, the city, they're going to provide parks and recreation. They're going to provide police services. They're going to provide fire services. They're going to provide ambulance services. They're going to provide sanitation services. They are most likely going to provide utilities, water utilities, maybe electrical utilities. They are going to provide code compliance. All right, so there's a lot of services, and they're broad services that they're going to provide for all of their residents. Versus a special purpose government, they usually have a very narrow amount of services that they would provide. As an example, a school system, a public college, a public university like FAU, a public hospital, a fire district. So you can see a water district. You can see that they are very narrow in scope. Okay, and in this course, we're going to be studying all sorts of general purpose governments and special purpose governments. We have, in the earlier chapters, we talk about all types of general purpose governments except federal government. This class, we do not talk about the federal government, but we talk about state and local governments. And in the latter chapters, we are going to talk about special purpose governments. We're going to talk about colleges and universities. We're going to be talking about healthcare organizations and the like. Nonprofits are legally separate organizations. They usually are exempt from taxation. All right. Unlike for-profit organizations, we can see that governments and nonprofits, they lack a profit motive. It doesn't mean that they can't make a profit. It just means that that is not their main goal. A nonprofit can make a profit. A government can make a profit. It's just not their main goal. And last but definitely not least, there is an absence of transferable ownership rights. Unlike a for-profit company that is owned by shareholders or stockholders that can easily be sold among different owners, that is definitely not the truth with governments and nonprofits. You can't buy stock in your local government. You can't buy stock in a nonprofit. There is no ownership rights. The equity is simply the difference between the assets and the liabilities with governments and nonprofits. Okay. The power ultimately rests in the hands of the people. With a government, the people vote. They vote for the mayor. They vote for the commissioners. And by voting, they're delegating the power to these public officials through the election process. And of course, those elected officials need to be accountable. And of course, the governments have the power to tax. Taxes is the main source of revenue for most state and local governments. Okay, now what are the financial accounting standards, the financial reporting standards that must be followed? Well, in this class, take a look at the first two boxes. That's what we're going to concentrate on. So your state and local governments, they are going to follow GASB standards. GASB stands for Governmental Accounting Standards Board. As well as governmental non-for-profits. All right, some nonprofits are governmental in nature. Some nonprofits are non-governmental in nature. Let me give you an example of governmental nonprofits. FAU is a perfect example. Florida Atlantic University is part of the state government. You all know, I hope, that it is a public university. However, FAU is a nonprofit. Ultimately, all governments are nonprofit. So GASB standards would be followed when FAU prepares their financial statements. Versus the FASB, and you've all learned in prior classes that for-profit companies follow FASB standards, the Financial Accounting Standards Board. So for-profit companies, as well as non-governmental non-for-profits. Another way to say that is private nonprofits. The FICPA, the American Cancer Society, your local church, your local synagogue, your local place of worship. These are all examples of private nonprofits, and FASB standards would be followed. Do not concern yourself with the last box on this particular slide. Once again, anything to do with the federal government, you are not responsible for in this particular class. Okay, the GASB. Accountability is the cornerstone of all financial reporting. So basically, the elected officials need to be accountable to the taxpayers. And like I said, it's all open. There are no secrets. You can go to your local city's website. You will find the budgets, the approved budgets. You will find the financial reports. You will find the budget versus actual variance reports. You will find forecasts. And like I said, it's all out there for everybody to review. They need to be accountable. Here's another concept called interperiod equity. That is the government's obligation to disclose whether current year revenues are sufficient to pay for current year benefits. We don't want future taxpayers to pay for future benefits, or current year benefits, excuse me. We don't want them to pay for that in the future. As an example, pension. If our current employees and retirees are earning a pension, all right, we don't want the future taxpayers to be burdened with that. We want to make sure that we are earning current year revenues to cover those current year benefits, even if it will be paid out in future years. A pension is a good example of that. So interperiod equity, all right, we want to make sure the obligation is disclosed, whether we were able to do that or not. Okay. Let me see. Okay. Now, the financial report of a government is called a CAFR. CAFR. It is an acronym for Comprehensive Annual Financial Report. Comprehensive Annual Financial Report. Now, a CAFR has 3 different sections, and we're going to talk about them in a little bit. But first, let me show you the minimum requirements for external financial reporting. First, we have what's known as an MD&A. An MD&A is an acronym for Management's Discussion and Analysis. This is basically verbally explaining in detailed words the results of operations and why. Why did we earn so much revenue or have these expenditures? After the MD&A, we are going to have the financial statements. And what you're going to learn in this class is there are 2 levels of financial statements. We're going to have our government-wide financial statements. We are also going to have our fund financial statements. Our government-wide financial statements, think of that as like the consolidated financial statement for the entire government. And then we have our fund, F-U-N-D, fund, different fund financial statements. Think of a fund like a subsidiary, right? We have different funds, and I'll explain the different funds as we go along in this particular course. We have different funds. We have what's known as governmental funds. We also have proprietary funds, and then our third category is called fiduciary funds. Right, so we have the different funds, and there are multiple types of governmental funds. There are multiple types of proprietary funds, and there are multiple types of fiduciary funds. And that's something that we are going to report on each individual fund. After the financial statements, we have the footnotes, and then we have a last section called RSI. RSI is an acronym for Required Supplementary Information. And in here, we would have other information that's not necessarily a footnote, but it would be very important for the readers of the financial statements to understand. An example would be budget versus actual for various governmental funds. Wouldn't you think that that would be something that the readers of the financial statement should understand? What was the original budget versus what actually happened, and the variance, the difference between the two? Absolutely. RSI. That would be just one example. Okay, like I said, the government-wide statements, it's really like the consolidated financial statement. And then we have the different fund financial statements. Okay, first of all, the government-wide financial statements. The government-wide or the consolidated financial statements, they use accrual accounting. And this is so critically important because we're going to see that some fund financial statements do not use accrual accounting. But the government-wide statements use accrual accounting. And with accrual accounting, the whole objective of accrual accounting is to assess overall operational accountability. What that means is we are recording transactions for all of the operations. The focus is on the flow of economic resources. All right, so I need you to, everything in bold black words here, you actually need to, you need to match these up. So as an example, accrual accounting is matched up with flow of economic resources and operational accountability. All right, now the fund financial statements. We have three categories of funds. Like I said, think of funds as a subsidiary. Okay, the first category of funds are called governmental funds. Governmental funds are basically those funds that are to account for the general government operations. So as an example, with a local city, a municipality, the local government operations would be police services, fire services, your city hall operations, your parks and recreation, and the like. Your general government functions, your day-to-day governmental, general governmental operations. Okay, now governmental funds do not use accrual accounting. They use something called modified accrual accounting. And throughout this semester, we're going to be talking more and more about modified accrual. It's almost like cash basis, but not quite. All right? Modified accrual accounting is not to assess all of the operations, but fiscal accountability. And that means, right, we're interested in the current year only, not the whole economic situation. So we're interested in just the short-term current financial resources, not all of the economic resources, just the short-term cash flow. All right, that's why I said modified accrual is almost like cash basis. The only interest is on the short-term current cash flow is the best way I can put it. And I'm going to show this to you as time goes on. All right, so the governmental funds will use modified accrual accounting. And then we have our second and third categories of funds. We have our proprietary funds and our fiduciary funds. First of all, let me say these two last categories of funds, these two categories of funds are going to use accrual accounting, just like the government-wide statements. Your proprietary funds are report on business-like or business-type activities of the government. These proprietary funds are basically when the government actually operates something where the users pay a user fee that pretty much covers all of the expenses of that operation. Let me give you an example. Sanitation pickup. Sanitation pickup is not, the revenue from that is not from the taxes, the property taxes. There is a separate fee that that taxpayers pay, that residents pay for garbage pickup. Another example, water utilities, right? A lot of times when you live in a local city, you are paying the city a water bill. That is a separate and distinct fee. It's not paid through taxes. All right, let's think of some larger cities. They might operate a subway system. They might operate a bus system, a train system. Now let's come local. Down here in South Florida, you might have a local city, a local municipality that operates a golf course. These are all examples of proprietary funds. The users of all of these, another example, toll road, right? Florida's Turnpike, you pay with your SunPass. Most of you do. These are examples of proprietary activities, and they would be accounted for in these proprietary funds. And the last category is called fiduciary funds. The fiduciary funds report on the government's responsibility for managing other people's assets. So we as the government do not own these assets, but we have a responsibility to manage them. Example, trust funds and agency funds. An agency fund is when the government acts as a pass-through. Let me give you an example. County tax collector. For those individuals that live within a certain county, the county will send you a tax bill. You will pay that tax bill. But if you are a homeowner and you look a little closer at that tax bill, you realize that you have to pay county taxes, local city taxes, school taxes, maybe a special water district tax, etc., etc. You might wind up paying 9 or 10 or 11 or 12 different governmental entities. You don't write, as the taxpayer, you don't write 9 or 10 or 11 or 12 different checks. You write one check made payable to the county tax collector. That county tax collector is acting as an agent. They take that money and then they distribute it to all of the individual governments. All right, that is acting as a fiduciary. Another example would be a trust. All right, an example of a trust could be a pension. So government employees, they typically belong to a pension. And so what the government will do is they will manage the pension fund, even though the assets in that pension fund belong to the current retirees as well as the current employees, which will eventually become retirees. So this is an example of a fiduciary fund. Fiduciary funds, like proprietary funds, they use accrual accounting. Here's the CAFR. Like I said to you, this is the Comprehensive Annual Financial Report. A CAFR has 3 sections. We've got an introductory section, we have a financial section, and we have a statistical section. Certainly, I want you to know that the CAFR has 3 sections, and I really want you to know the details of the financial section, considering this is an accounting class. But just so you have some background information, the introductory section is really just the admin section. Title page, contents, table of contents, letter of transmittal, and anything else that management may want to throw in there. The financial section will have an auditor's report. For those of you that took auditing class or are currently taking auditing class, you know what an auditor's opinion is. That's what this auditor's report is. It'll have the MD&A. It'll have the government-wide as well as the fund financial statements, and it'll have the RSI. And any other information like combining schedules or individual fund schedules. These are things that we will talk about later in the semester. And then, of course, lastly, the statistical section. We might have demographic information, economic information, financial trends, operating information, and the like. All right, and then we have a whole bunch of slides dealing with federal government, so you can slide right over them. And now we just have a few words to say about our nonprofits. And we'll talk more about nonprofits later in the semester. Now, the primary purpose of a nonprofit is to provide decision-useful financial information to donors, to members, to creditors. As an example, the FICPA might have donors where they actually donate to the nonprofit. By the way, nonprofits typically get most of their revenue from donations. The majority of them do. The nonprofit could have members. As an example, as a CPA in Florida, I am a member of the FICPA. And you guys as students could be student members of the FICPA. And of course, nonprofits, they could have a bank loan as well. They could also have a creditor, just like a for-profit could. All right. And so obviously the financial statements prove to these resource providers what the financial statements look like. 3 required statements and sometimes a 4th. With nonprofits, we have a balance sheet. We have an income statement, which is known as a statement of activities. And lastly, a cash flows statement. We are going to see that a 4th statement is usually prepared. It's called a statement of functional expenses, all right, which breaks out our expenses into different functions. We are going to see that our expenses for nonprofits are either considered program service expenses or supporting service expenses. The program service expenses are those expenses spent directly on the core mission of the nonprofit versus our support service expenses, which are pretty much the general and admin expenses of the nonprofit. And one thing that is pretty unique with nonprofits is the equity section of the balance sheet is called net assets. And the net assets are broken down into 2 categories. We have net assets with donor restrictions, and we have net assets without donor restrictions. You are going to see that when a donor donates to a nonprofit, they may donate and say, hey, nonprofit, you can do whatever you want with this money. That would be considered a net asset without a donor restriction. Or a donor can stipulate how the money can be spent, when the money could be spent. So as an example, let's say I donate to my local church and I say, hey church, here's $1,000. I want you to use it to pay for the next mission trip to Haiti. Okay, I have given that church a donor restriction. Or I might say, I need you to use my donation to buy a new piano for the worship team. Once again, that's a donor restriction. Or I might say, here, church, here's $1,000 in this year. I'm giving it to you now in this year, but I don't want you to spend it until next year. Well, that's a time restriction. All right, so these are all sorts of donor restrictions. Or I can say, here, church, here's $1,000. Do whatever you want with it. That would be obviously without a donor restriction. And that's something that is very important. All right, so that is kind of a little macro view of governmental and nonprofit accounting. I look forward to the chapters in the future.